Hello. Am I audible?
Yes.
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 Thank you. So, uh, so let's begin. Good evening, everyone. I'm Sejal, marketing lead, and on the behalf of Team Indictrans, I'm pleasure to welcome you all in today's webinar. So this section is especially close to us, not only because it addresses the core financial functionalities in ERPNext, but because we have received a significant rise in inquiries from our clients and also in our community regarding this topic. So with that mindset, we curated this section to provide a clarity, direction, and practical insights. So whether you are implementing ERP next or already running it or want to evaluate in your business, this section will be helpful to you a lot. And also, we are honored to be joined by our speaker today, Mr. C.A. Ghanshyam. So Ghanshyam is a chartered accountant with a deep domain expertise and hands-on experience in ERPNext implementations. Over the years, he had been leading 35 plus projects across industries like trading, manufacturing, services, and many more, which makes him one of the most experienced professional in this space. So I will not take much time of yours. Just one last instruction. If you have any questions or want to know more about it, you can drop your question in chat box with your email ID. So in case your question might not be answered in the section, so we can just mail you with the answer. So with that, let's get started. Over to you, Ghanshyam.
Yes. Thank you, Sejal, for the wonderful introduction and setting the context for this module, for this webinar. I hope I am audible.
Yes,
Yes.
you are audible.
Thank you.
Very much audible, Ghanshyam ji.
Uh, so just to give you to set the context that what we are going to achieve after today's webinar. So this webinar is for those who want to understand the basic and advanced accounting features, in core modules of ERPNext from the business perspective. Secondly, this webinar is going to help those who want to deeply, dive into the accounting module and accounting functions of ERPNext. And finally, how subtle is this accounting module? How subtle is this accounting module for everyone to understand and implement in ERPNext? So this webinar is, is conducted with these objectives, and I hope you will be benefited on these lines. And thank you once again for joining, and I wish a very good evening to all my attendees who have joined this meetings, who have joined this webinar. To start with, let me share my screen. Everyone must have heard this, have read about this quote that for a want of a nail, the kingdom was lost. Just to elaborate what I want to say, or what this quote exactly means. This quote means that for a want of a nail, the shoe was lost. For a want of a shoe, the horse was lost. For a want of a horse, the rider was lost. For a want of a rider, the battle was lost. And for want of a battle, the kingdom was lost. Why? Because of a horseshoe nail. And all was lost because of just a single horseshoe nail. Just to compare this analogy, that how this small thing, how this small events or this small, activity can help one and all, and how small activity can be so devastating if we don't take care of this. So for a want of a correct configuration, the ERPNext implementation was lost. How it started, that for a want of a correct configuration, the correct master data was lost. If you don't configure it correctly, the master data will not be prepared correctly. If the master data is not prepared correctly, then the actual transaction that should happen with its own, originality and its essence, its core essence, that will not happen. If the correct transaction is not happening, then it won't give any correct financial impact. And if the correct financial impacts are not coming, then whatever data you are looking at your financial statements, everything is, garbage. And if the financial statement data is not correct, then the decision making will also lead the same way. And if the decision is going wrong, then the company is lost. Why? All for a want of correct configuration. So I just want to remind here to all of my audience that although you will look at, the features of ERPNext, which I'm going to show you, you will be feeling that, yeah, probably this, all things you're knowing, you are aware of it. You know how to, implement the accounting module on the various, fronts of buying, selling, manufacturing, stock, HR. But what I want to emphasize here is, even though you know those things, but I want to make sure that those things are quite important for us. That is what we should know. Because if a correct configuration is lost, then kindly remember in this entire webinar, please stay with me, please be with me. I'm going to help you in not losing your company, in not losing your correct ERPNext implementation of the accounting module. So let's start on these lines. My topic for today is accounting nuances in ERPNext. I'm CA Ghanshyam Brahmbhatt, currently heading the operations and strategy in New Indictrans Technologies, Pune. So you must have heard of this, the topic would have been shared with you. What exactly this nuances means? The word nuance refers to a subtle difference or distinction in meaning, expression, or detail. It implies a level of fineness and subtlety that might not be immediately obvious. There are certain things in life which are not quite obvious, which are not, too apparent for us to understand, too apparent for us to, have or feel the importance for the same. But those things are, very distinct, and that makes a lot of difference if those things are not taken care of. And how beautiful this accounting module, has been woven in ERPNext in the various modules. That is what I'm going to take you through, because it's not just, creating the master data, but also taking care of the accounting aspects while creating those master data, while creating, whatever it takes to implement any module in ERPNext. So to start with, what I'll be taking you through, I'll be taking you through the accounting nuances, accounting significance in various modules of ERPNext, be it buying, selling, stock, and finally the accounting model. To start with, I'll be starting with the buying module of ERPNext. So generally, whenever we are doing any kind of implementation, or whenever you are going to deal with the buying module of ERPNext, always remember there are going to be 3 types of items which we are supposed to create, or there will be, you take any transaction, it is going to be, covered under these 3 brackets or these 3 types of the items. What are they? I'll reveal it very soon. In buying module, what we are going to, these are the highlighters which I'm showing you right now, which we'll be going through as and when we are progressing in our webinar. First is we'll be going through the 3 types of items. Second is the supplier payable accounts. Third will be small configurations, but having significant impact. There are certain areas which are quite small, but it is having a significant impact. And finally, the reports in the buying module. Now, the question, buying of 3 types of items, which are they? First is your stock items. Second is your service items. Third are your asset items. Just to give you an understanding that what all 3 items means. The first item is dealing with your stock. Whatever trading is happening, the goods that you're buying and selling with a margin, that is what it means when you are saying that it is a stock item. And it is having its own significance while we are, doing the transactions. The configurations are changing in all these 3 kind of items. Why I am emphasizing or why I'm classifying this? Because all 3 items are getting created in a different way in ERPNext, and all 3 items are having its own accounting impact or financial impact. Okay, so just to start with, there are 3 kind of items: stock item, service item. Service items are generally the expenses which we incur. This doesn't include any kind of stock, doesn't include assets, doesn't include any tangible things which we do. So all those things fall under the service item. Third is the assets. Apart from your trading stocks, expenses, there is a third kind of thing that is falling in your financial statements or balance sheet, which is assets. So these are the 3 kind of items. And yes, to remember here, asset also includes normal asset item and capital work in progress. Capital work in progress is what? Just to tell you simply that it is an asset in making. The asset is not yet prepared completely. It's not ready for usage for your organization. It is in a progressive way, it is getting created, and it takes time to come into the form of an asset for your usage. But when we say why I have written this 2 separately, because these 2 things are having its own configuration while we are creating or while we are doing any transaction in ERPNext. So those are the 3 kind of items. To go ahead, I would like my audience to get aware with a basic literacy on how the standard functionality works in ERPNext. So this is a pyramid where whatever configuration are done at the item and supplier level, as we are dealing with buying, these 2 are very crucial master data which are required to be prepared. So if I'm preparing an item or a supplier, and if I'm defining my details related to accounting in the master data of item and supplier itself, then ERPNext consider it for the transaction. If in those master data of item and supplier, if I'm not defining any kind of accounting details, then my system or the ERP is asking that what is defined at the item group level or what is defined at the supplier group level. So that is the second hierarchy or the second point of reference that system is considering for fetching the details of accounting in your transaction. And if nothing is defined at item or master data level, nothing is defined at item or supplier group level, then whatever has been defined at the company masters. See, I am having one assumption here that my audience is using ERPNext. From the data that we have gathered or from the questionnaire that we have sent for the registration, my audience, 90 to 95% people are aware of what ERPNext is. So I believe that whatever I am saying currently, you are aware of these functionalities. Okay. So with this assumption, I am telling you that at item master level, item supplier group level, and finally the master level. So this is the hierarchy of application for application of configurations. To start with, buying of 3 types of items. There are stock items and service item. What it includes at the item, I would like to show you here. I'm sharing my different screen. So what it includes at the item level, you all are aware that when we create any item, these are all the tabs which are available for us. My focus for everyone.
Screen is not available. Screen
Sorry?
is not available.
Sorry. Let me share it again. Yes. To start with, these are various tabs which are visible to us when we are creating any item. Now, what is my assumption over here? I am creating a stock item. If you say that I'm creating a stock item, then my maintained stock has to be mandatorily ticked. Only then my system will consider that this item is my stock item. Now, what all are the configurations that are supposed to be considered when you are creating an item? And I'll be more focusing on this accounting tab. So pardon me if I don't take you through the other tabs, but what all tabs or what all things which are necessary and which are linked with accounting directly, I'll be taking you through those aspects of the master data. So you can see that I have gone to the accounting tab. I've clicked on this company. This is my default company. There could be your multiple companies are there in ERPNext. It supports the multiple company structure. So you could find that there are 2 different companies which are listed here. I'm opening one company. As you see that we are dealing with buying, then this is very important for me to define here, which is my default expense account. This is very important for me to define here, which is my default expense account, because when you're defining here your expense account, where this impact directly goes, this expense account is directly linked with your delivery note. How buying is linked with delivery note? Because when you're defining your expense account and when you're delivering your goods, your cost is getting recognized. And let's say your organization is having various kinds of stock, be it raw material, be it consumables, be it different kinds of items are getting used in your organization. And in your balance sheet, if you are maintaining the cost of all those kinds of stock, then it is very much important for us to define this default stock account at the item level. That is first thing. As I said, how convenient it will be to define for each and every item. Let's say there are 100 items, 1,000 items, 5,000 items in a particular group. Then there is another area, or there is a simplified way in which you can define this expense account, and which is you define it at your group level. As I said, system will ask at 3 places that where is the default expense account defined in my system. First, it will ask at your item level. Second, it will ask at your item group level. And so if my question, which I raised previously, that if you are having 1,000 items, do you need to define it 1,000 times? No, you define it at group level. Automatically, this will be fetched at the transaction level. But if you have not defined at your item level, if you are not defined at your item group level, then where will system ask, or where will system pick that account from? System will pick that account from your company masters. So whatever company you have created, over there, if you just go to your default expense account, system will consider this default cost of goods sold account, whatever has been defined at your company master level. So these are the three areas, the hierarchy which I showed you right now. System works in this way. So first thing that I would like to highlight was defining your expense account in the accounting. If you are having your default discount account, definitely you can define it at your item level, or item group level, and finally at your company level. No, discount is not available at company level, but item and item group level, both the places, you can define your discount account for this particular item. So this is a place where we define where we configure the accounting with our items. This was about creating your stock item. Second will be about your service item. I've created my service item, in which the basic requirement is I should not keep this maintained stock as a tick. If this is tick, and if you are buying these goods, then it will be considered as your stock item. And going further, it can, give you a deviated results, or the results may not be correct. So please make sure that whenever we are creating any item, and if it is a service item, then definitely this maintained stock has to be removed. So now what happens when you are buying a service item? Whenever you are buying a service item, the cost is recognized directly when you are purchasing and when you are creating a purchase invoice. When is the cost recognized in your stock item? It is getting recognized at your delivery note. Just to reiterate, but whenever you are buying a service item, it is directly getting recognized when you are buying this service item. So it is very much required. See, generally we tell our clients that you would be having your own chart of accounts. Just to share you, for your reference, in chart of accounts, you would be having in indirect expenses this many number of line items which you would be buying. So what has to be done is all these indirect expenses heads has to be created as an item, as a service item. So that whenever you are buying fuel, let's say tomorrow you are buying any fuel, and if you are paying through your company credit cards or through company account, then whenever you will be choosing, or whenever you will be creating a purchase invoice, in the item, you will be selecting that fuel item. And that fuel item is linked with your expense account. So whenever you will be submitting that invoice, your ledger for fuel will be getting hit correctly. So going ahead, or whoever is implementing this accounting module, kindly make sure that whatever items which are, you're buying over here, whenever you are buying or whenever you are creating a purchase invoice for that, make sure you have that ledger as your item created in your item master. And those item has to be linked with your indirect expenses ledger. So this was all about, the master data, which is required for stock and service items to be created in the item, at the item group level also. Yes, the same configuration. If I think for service, defining at a group level will not make sense unless you are having more line items for a particular service, which you can, define in your group or under an umbrella, and you can define directly in your umbrella of the item group. So automatically the expenses will be picked from the item group itself. For stock, it is very much required. For stock, you can have a common configuration or you can define it commonly, but for service, it is generally advisable to create an item and take it forward. And we also went through, a concept where if the things are not defined at the item and group level, then the things defined at your company level will be picked by the system or will be considered by the system. So these are the three important, items, configuration, which are required for stock and services. Going ahead, we are buying a third kind of item, which is what? Which is asset. So let me take you through how we are defining or how we'll be creating our assets. Let's say I'm creating or I'm buying a laptop for which maintain stock. If you remove that maintain stock, then each fixed asset, this tick mark gets enabled. System is prompting you, it's asking you that whether this is an asset or not. If you don't tick this, then system will consider it as a service item. But if it is a fixed asset, then it has to be clicked. And these two other options are required. If required, then you can keep a tick mark on. So first configuration for asset is fixed assets. And second, as you can see that, there is no accounting tab. It has just got vanished. So where are we defining our assets? Assets, how the asset is linked with accounting at the item level. We have to just go to this asset category, because once you click on this is fixed asset, then asset category becomes mandatory. You have to define it mandatory over here. And why it is mandatory, why system is mandating us to define this category? Because all your accounting configurations are defined at your category. If I open my category, and I think everyone, all the accounting fellows who have joined here or having some background of accounting, you would agree with me that we don't have, large number of accounting, you can say, categories or extensive categories in fixed assets. But yeah, whatever are your, whatever assets you would be buying, it will be defined or it will be, linked with certain categories. If I open the chart of accounts, more or less, your assets will be linked with, these are the standard categories which, ERPNext provides us whenever you are creating a new instance. But definitely you can have your more assets created. So all your assets are falling under this buckets of fixed assets. And this fixed assets, we are defining, or you can say we are linking by creating a category, and we are defining the fixed asset account, accumulated depreciation account, depreciation expense, and capital work in progress. So this accounting mapping is happening at the asset category level. So whenever you will be buying this asset, your electronic equipments or fixed asset account will be getting debited instead of, the service expense account, or instead of your cost of goods account, your direct fixed asset account will be getting debited. So what is the difference between a normal asset and a capital work in progress? Where is the, distinction, or where is the subtlety lying over here while you are creating an asset? If you are having a work in progress, that is an asset which is in making. How you will take that asset into consideration, and how will, you can easily buy that asset, and easily the impact is getting correctly, booked in your books of account. So for that, we need to create a category, which is a WIP category. So see, this is as per the practice which we have, found, which is, acceptable practice, and which are complying with all the norms as we consider, while implementing the accounting module. So after taking into diligence all these aspects, we have found that for our WIP assets, it is better to create a separate category itself, Although you will be having, land or machine, but if your machine is having a WIP category, then prepare a separate category like machine _ WIP. So that whatever machine you will be making, that will be directly linked with your WIP instead of, putting this tick mark in the same asset category. Prepare a separate one. So I have prepared a separate category for WIP, and this check mark is mandatory. Along with that, what is your capital work in progress account? You have to define it correctly over here. Because as you will buy your capital work in progress asset, then this account will be getting debited and your respective party will be getting credited. So these are the basic things which are required for asset definition, for linking the assets to your transaction in buying. There is another configuration required for asset. Let's say if you are not defining at the category level, system will pick it from the company level master. Your accumulated depreciation, your depreciation expense, these two are the only thing, or capital work in progress. As you can see, these are the only ledgers or the masters which will be called from the company master. But that fixed asset account has to be defined by us. That is mandatory anyway. So these are the requirements, or these are the configurations required while you are creating your master data for purchasing. Let me go to the next aspect, which is the supplier. The second aspect of buying is, now as we have configured, 50% job is done. Once you are configuring your items properly, then the 50% job is done. The next 50% job lies at the supplier level. As you are going to a supplier, you can find here, once you create a supplier, accounting tab you go, and once you go over there, we have to define a default payable account. If your company is having a kind of a structure or a kind of a supplier, and your company chart of account is such that you are maintaining the categories of your supplier, then those categories, if it is there, see, generally in big organization, they are defining, like for example, they are having their domestic creditors, they are having their export creditors, they are having their, in domestic also, if they are having a kind of a classification in states, countries, in the same cities, then those, if required, then they will prepare such a wide chart of account. But those chart of account or the ledger has to be linked with a particular supplier. If this is linked only, then you will be getting a correct impact while creating your invoice. So first is defining at the supplier level. Second is you are defining your default account at the company group level, at the supplier group level. If you are not defining at your master every time, as I said before, that you cannot define it 100 times, then you define it. If all those 100 suppliers are falling under one category and one payable account is enough, then you define it at the supplier group level. So that is what system is going to ask while you will be creating your transaction. The second aspect, the other aspect which I would like to draw your attention is, if you are not defining at your supplier level, at your group level, then definitely at the company master, where the default payable accounts are defined, system will pick this up. See, generally when people are, creating the site for the first time, and if these configurations are not done, then they would be getting this kind of queries. And these queries are such, which are required for to take your transaction ahead. So you are defining your supplier categories at the supplier. You are linking your ledgers at the supplier level, group level, and company level. So once these two things are done, and why these are required, just to share my PPT again. Why these configurations are important in buying module? Because these configurations will help you to accurately book the expenses and assets in the correct heads. See, generally we feel, happy once we are implementing or once we are rolling out any module. But it is the post-mortem which is done after a certain period, let's say 1 or 2 months. And once the data is getting generated from where you have left, and once you do that audit, this is where, the questions are coming and where the integrity of a system is asked. Where people are complaining that the system is not working correctly, these are not coming correctly. Why it didn't come correctly? Because you didn't define or you didn't accurately define this particular things, define this particular expense account due to which the data didn't come correctly. But if done correctly, then you are getting accurate books of account. Second is to forgo the access of accounting ledger selection to the business people, which is reducing the human error. Just imagine if I would not have defined my expense account for the service item, then I believe the people are aware of once you create a purchase invoice, you are getting an option or the system will ask you to define an expense account. And every time, if this definition is not done one time, see, this is one-time activity. If you're not defining your service item, then every time system will give a prompt to define that account, and the business people or the purchase department or whoever is, see, the kind of people, the first level people will have to link accounting ledger. And that is where the problem will lie. The problem will come that people will not be able to define it correctly every time. And if this one-time activity is done, then you are reducing your human error. Second is to keep the uniformity between the accounting department and purchase department. Just let me show you one example that what exactly, and how greatly this impacts. If you're not defining these things, then at report level, what happens is, let's say I'm looking at my accounts payable report, and when the accounting team will look at it, and if I would have defined only one ledger, okay, then I will be shown only one amount, that let's say 1 lakh rupees is outstanding. But if purchase team is looking at it, they would have defined various categories, let's say export, domestic, maybe you can say consumables, raw materials specifically. So all those categories, this 1 lakh rupees will be divided, let's say 20,000, 30,000, and 25. So when they will interact with each other, the person will say that, hey, my sum is coming at this, my amount is coming this. The accounting team will say, no, it's only 1 lakh rupees that you have to take. But if these two things has to be matched, then if as per the categorization which you have done at the supplier level, if you're doing at the accounting ledger level also, and if you're linking it correctly, then this ambiguity or this, friction will not come. Okay. So this is where it means, this is what it means when I say that you are, once these configurations are done, let me again come back to my screen, then two departments will be in a sync. Yes, I think audience is raising their hands. I would suggest to write their questions because we'll be taking a Q&A session in just 5 minutes. So last 10 minutes we'll be having this Q&A session. So just to, this human errors will be getting reduced. Then there will be a sync and uniformity between accounting department and purchase department, and you will be booking your payable account. Initially, what I have written is the expense and assets are, getting booked under the correct heads. In the same way, the payable accounts will be also getting booked under the correct heads, as I showed you right now. So this configuration are, bringing a holistic picture or making it comprehensive for everyone to be on a same page of understanding when the organization is big. For smaller organization, yeah, you don't have the same person is taking care of everything, so you don't have to worry. But when the organization is big, then this all things matters a lot. So going through the reports which are getting generated in ERP, there is a report of supplier payable and supplier payable summary. I believe all of my audience is quite aware of what these reports are, because these are very basic reports in ERP for buying module. But there is one distinction that I want to, draw your attention for. If you are opening a supplier payable report, there is a section for defining an account, that which is a payable account, and against that payable account, what all outstandings are there against the supplier. So for an example, if you're choosing a single, let's say, creditor account, and if you're choosing a supplier, the outstanding might be 1 lakh rupees. But if you go to the supplier payable summary, and if you're only choosing that supplier, then there is a possibility this figure might change. Why? Because in summary, it considers the overall outstanding against a particular supplier, taking into consideration all the payable accounts, not just a particular one which you have selected in your payable account. So this is a major difference between these two when you are, reading your reports in ERPNext. Next, purchase register. What it is nothing but it is a blend of your ledger and your report. Generally, ledgers are different and your reports are different. But if you open a purchase register, then that will be, kind of this is a report which gives you a feeling of both the ledgers and your report. Second is purchase order analysis. If you are going to purchase order analysis, then it is considering your purchase invoice and your payments. Let me just share my screen quickly to help you out in understanding it. Purchase order analysis. So what it considers? It considers, see, as I said previously, that register was a combination. Now purchase order analysis is against your order, how much, how many bills have been generated and how much amount has been paid against those bills. Against your, so it is considering your PO, PI and PR. So purchase order, purchase invoice and purchase receipt. All these three things are considered under this report, which is another, there is another report, which is item wise purchase register. Considers the the buying of the item. It is a report which shows. Am I audible to everyone?
Yes, sir.
Yes.
Yes.
So this report shows you the connection between your purchase invoice and the items that has been ordered. So till now there was no, no stock item was coming into your picture. Whatever report we have seen, the purchase order or the supplier summary or the payable summary and all those are the supplier payable report. But this report helps us, in linking our purchase invoice with the stock item, what has been bought till now. And finally, the supplier ledger summary. If you just want to see that what is, supplier ledger summary, what is the current outstanding of each of your, so this is linking your payment against the invoice that has been generated till date. And this gives you a gist of, what all transaction has happened in your buying. So coming back to, so these are the standard reports in ERPNext, which helps us and which are linked with our accounting. There are another reports, but they might not be linked, but these are linked with your accounting transaction and accounting impact. So I think Sejal, we are running short of time and we have just gone through this buying module. I've also prepared for the selling one, but I think let's keep it on a different day. And if this webinar is, helping our audience, then we can also definitely have the second session for this accounting, or you can say second version, the second part of the. We will go into the other modules one by one, and we'll also consider, the special cases. Let's say, I think we are running short of time, but these are all the transactions which I had, chosen to take you through for the buying. I think the first two are linked with your buying, the tax related configuration, especially the GST, TDS, and your import transaction. So directly jumping to Q&A, as you are running short of time. If yes, I'm open for the questions. Team. Yes, Abhinav.
Sir, I have mentioned in the stock item default expense account, and I have also mentioned in the default account of supplier. Which account will be debited in the if we are making an invoice, having a supplier that have a default account mentioned there, and in the same invoice we have a stock item in which the default expense account has also been mentioned. And which account will be debited, sir?
So see, let us be fundamentally clear. What item it is? Is it a stock item or a service item?
Stock item.
Stock item. So now please understand, whenever you are buying a stock, the expense is not getting recognized at that level. I mentioned specifically that your cost of buying a stock is getting recognized when you are preparing a delivery note, or when you are preparing purchase invoice with update stock tick mark, and when you are flushing out your stock while delivering. So the default expense will be getting triggered at the delivery note or sales invoice when you are creating, or when you are flushing out of your, flushing out the stock while you are preparing the sales invoice. So when you are buying the item of any stock, when you are buying any stock item, the expense will not get booked. The debit will not happen for the expense, because you have the perpetual inventory. Yes, there is another aspect. If your perpetual inventory is on, then expense is not getting booked at the purchase invoice level.
I believe inventory account will get debited to the best of my knowledge.
Yes.
So debit inventory, credit supplier, or credit creditors.
Correct, sir.
And for the service item?
Yes, and for the service item, whenever you will be buying a service item, then definitely the debit of the account which will be getting posted is this default expense account which you are defining at the item level. So whenever
supplier default account will be credited.
Yes, when you are preparing a purchase invoice, and if your default expense account is defined at your item level, then that will be getting debited while buying the service item. Okay, next question. I hope I have answered your question.
Yes, sir.
Thank you. Yes, any other question? Yes, Abhijit. Yeah.
Hello, sir.
Hello.
Am I audible?
Yes, we can hear you.
Okay. Sir, in accounts payable report, there is this advance payable to supplier is also coming. So how we can erase from that report? Eliminate from that.
So your doubt is you want to advance.
Can you repeat, sir?
You said that there is an advance. I think your voice is echoing.
Hello?
Yes.
हाँ sir. Can you repeat?
What you are asking is
Okay. Sir, in accounts payable report, the advance payable to supplier, advance already paid to supplier is also coming. How we can eliminate from that report?
you want to eliminate that.
Ghanshyam, your voice is low.
Sir, what she is saying is she just want an outstanding report instead of
Yes, sorry.
hello. What she was saying is she want to eliminate the advance paid to the supplier from the outstanding report.
You want to remove that from that report, standard report.
Yes.
See, if you want to remove that from that report, and that is a script report, standard report, okay? So I think you need to get the help. You can directly remove the voice is getting.
Abhijit, you may switch off, mute your speaker.
Hello?
So if I mute my speaker, how can I hear what he is saying?
Abhijit, there might be an situation where two laptops are side by side and the voice from one laptop is echoing through the mic. So after you are done with your question, just mute yourself.
Okay, understood.
See, just to share, I got your question. If you can remove it from here, because this is a script report. On technical front, see, if I'm removing this field, my screen is visible, right? Abhijit? Yeah. So
yes, it is visible.
If I'm removing this column from here, I can still see my report. But as this is a script report, I believe that you need to take help. If this is a script and standard report, how we can save this? You have to take help from your team, tech team, so that these reports remain intact for you. But I believe that this will not help you because your outstanding figure is considering this advance payment also. Advance payment, invoice amount and paid amount, after which this figure is coming of the outstanding. So in order to make a complete sense of this report in its entirety, I believe that you should not remove that, or you should have a separate report and prepare it in a different way, because your outstanding will get changed. You are removing that particular field from this. I hope
What our problem is, see, whenever we are drawing out the payable report from the ERP, it always considers whatever the advances are paid to the supplier, that also comes in the sum or total. So we just want the exact payable and receivable amount from the supplier as well as the customer. But if we go with the standard report, account payable or account receivable, the standard report always considers whatever advance we received or whatever advance we paid. So is there any way we can just eliminate those advance paid or advance received entries and see the report?
Yes, that's what I said. Just remove it here, remove it from here. And when you are removing it from here, then make sure you are saving it. But this will not help you, as outstanding will consider that advance amount. Or you create a separate script report for this. It will be better for you, I would suggest. Yes, we can take the next question. I hope I think I've answered your question, right? Am I clear? Hello?
Hello.
Yes. Next question, if anyone is having. Last question we can pick. I think one question has been asked by Mr. Alpesh Jani, how to configure supplier account when a supplier provides both services and raw material. So see, if you're having a distinction in your payable account for your, if your supplier is having, if your supplier is supplying both the kind of, so my question is, do you have this two payable accounts separate? Means you're maintaining a separate payable account for these two kind of purchases.
Creditor account, creditor.
Okay. So for creditors, if you are having, if your same creditor is having a different services and raw material, and if you are having two separate, you cannot assign two things at the same time. Rather, I would suggest at the creditor level, you can define it whenever you are creating a purchase invoice. So over there is a field coming for us. See, even if you're defining a defaults at the transaction level, system is giving us the freedom to choose the perfect or the correct payable account. So if you're buying a services, then you can manually define, or through scripts you can define. You can just link this to payable for a same supplier. This is possible, but it has to be done in a different way. The standard way, I don't see there is any way available that you can define for the same company two different payable accounts.
Okay. Done.
Yes. So I believe Sejal has already shared the email ID, and whatever questions you have, we are very much open for replying or answering to our questions. So definitely you can reach out to us, and we'll make sure that we reply to you in a very short time. So once again, thank you for attending and for listening. And we'll continue this. If this is our team will also share you a feedback form, and if this is really helping you out, then definitely we'll come up with the next part for the other modules. So that's it from my side. Thank you for the day.
Thank you.
Thank you.
Ghanshyam. Thank you, Ghanshyam.
Thank you.
Thank you, Ghanshyam.
Thank you.